I am testing my mic. Can everybody hear me?
Yeah, I
Yep.
can hear you.
Okay, awesome.
Yes.
All right, can you all see my screen again?
Yep.
Yes.
Yes.
Princess, I have rescued you. Now it's your battle.
Somebody TV on. I think.
Yes,
Okay, I
it's
got
my
you.
2-year-old. She has Bluey on.
All right, let's see.
Punch the drag. Take you back.
All right, let me add this indicator right quick. All right, so I'm gonna put this supply and demand zone in the wolf chart up. Um, we'll go from there. All right, so I just started the recording, and so the reason I was telling you guys about like this mindset of understanding the catalyst, especially when you get in the trade, and the trade has a catalyst behind it. You know, some of those trades are the ones where you will kind of kick yourself if you get out too early, or you'll leave like a ton of money on the table. You know, you want to remain disciplined when you're trading, especially if you have short dated contracts. But sometimes you will end up inside of a position like like a while back when people had silver and they had gold, and they were on these runs because people were thinking about, you know, recession or like gold shortages or silver, not gold shortages, but silver shortages, dealing with using it as materials and other things. Sometimes you can get on one of those type of trades, and it'll have a strong enough catalyst so that you're not just holding it blindly. Like I'm not saying get a contract with time on it and just never ever sell. What I am saying is when you're in a position, the way that you want to manage it is you want to have the trade in your possession and move your stop loss up and down as the trade is going up. So what that will look like is inside of your brokerage account, you will want to have, say you had your stop loss set at a negative price because you just got into it. So say you put $1,000 into a stock and you put your stop loss at negative 200. So say you were risking 20%, right? And then so say you never hit that 200% and you're up $1,500, and say you got, you know, 2 months of time on it or something, right? when you when that as that price is going up and you're up $1,500, then when your stop loss was at $8, because you know in the stock market, you know, say when you buy the contract, you're gonna say $10, like 10.004 when you spend $1,000. So your contract will be at a $15, you know, range, right? $15 to $1,500, worth $1,500. That's when you will move your stop loss up, and say you just set it at $1,000, so that worst case scenario, say the stock crashes the next day or something like that, it's just going to kick you out of trading. And when you do these type of stop loss, when you have like swing trades, you want to set the stop to good to cancel. It'll say like GTC, or it'll actually say good to cancel. What that means is that even if the market closes and the market opens up the next day, your stop loss will still be in that position. It's like, so it's gonna be there until you cancel it. And so sometimes when I'm in a trade, like a long term trade, I will put that stop loss at, you know, saying break even. If I get up like, you know, 30, 40% and stuff like that, you know, I'm at least gonna move it to break even. That way, if the stock comes and it crashes down and it triggers whatever my capital that I put into the stock, it goes back to the sideline. So worst case scenario, I just wasted time kind of holding that stock for like a week or so, or 2 weeks, or whatever long it took. Right now, the biggest thing you want to start doing is once you're up like that, you're trying to hold that and you hadn't hit your target. So you would say I was in a trade here and I jumped into this trade on MU. and say MU was pushing up, and say I'm up $1,500, right? And say I put my stop loss. I enter here. I put my stop loss at break even. Okay, it pushed up to 415, and then it pulled all the way back down to 392, right? And say if it pushed up and when it came back down here, it didn't hit, it didn't kick me out the trade. Just it maintained it because I was up so much, right? Now, what I'm doing is I'm trying to hit this target right here. And so while it's coming up, saying if I'm up now like, $1,000, I'm sliding my stop loss up to here. So now I'm trying to protect 1,500. So worst case scenario, if they don't make it and they start pulling back down, I get kicked out the trade. I didn't make the 800, but I made the 500, right? I'm saying if you're trying to hold something long like that. On the shorter time frames, it's the same. I do the same way, but it's almost like I'm squeezing it. Like if the stock price, the current cost of my contract was a sandwich, right? So like say this was like a piece of meat, and this was my stop loss was the bottom piece of bread, and my take profit was the top piece of bread. As we're going up, as that price is sliding up right here, I'm sliding that stop loss up under it, right? And sometimes I don't know if you all have ever used Heikenhashi candles or you just use just regular candles, but either way, when you're doing that, the way I do it in live market, I don't just slide it up randomly. Like if I slide it up, if I'm sliding it up, I'm looking at price, what I'm saying, breaking under. So like say if I was in it way back here, as a candle, you see how this candle right here broke out and it's still trying to go up. But you see how the next candle right here, let me zoom into it. And you can kind of tell when something's kind of going to break down a little bit further by the high and the low of this candle. So like if I'm watching this trade and I'm looking out, okay, I'm gonna exit out, what I'm saying, manually, or I'm gonna set my stop loss if I got shares. But you see how this candle it broke above that cloud, and then but this candle right here never came back down past the low of this candle. So this wick is way down here at 423, right? And so it pushed down, but it didn't come down under the low of that candle, but it actually just closed above the high. And so when the stock is going to keep climbing up, what you will notice is that the preceding candle after the candle that you entered in, it doesn't. The next candle is if it comes back and tries to close under the low of that candle, you're probably going to have a deeper pullback. But if the candles keep maintaining above and closing above either the high or body of the previous candle, it's showing you that you have that upward momentum versus when a candle closes under the body or the low of the preceding candle. You can see when you're gonna have a pullback. Like here, we see how we're pushing up, and then this candle right here closes kind of under the body, under the close of that candle. It closed. So the body of the candle tells you the opening price and the close price. So if you look up here at the top, you're gonna notice that when I put my mouse on this candle, it gives me that O up there at the top. That's the open, and that C represents the close. So this body is going to represent the open and close. So, and I'm just telling you guys this, so when you're in a trade or you're about to enter into a trade, understanding like closing above the body of the candle or closing above the wicks of the candle, which is the high, which is the most bullish way to close for a continuation or close under the low. These are like the kind of signals you want to look for, even when you're getting like lock candles, when you're getting the level 3 floating candles. The behavior of that candle after the confirmation candle will help you with your timing. So let's look at some examples of that. You know what I'm saying? And we'll touch on when you're getting the confirmation, how are you timing those entries to get in, even if you're on a 5 minute. So you all can unmute. We can just talk. What time frame are most of you all kind of trying to enter in? Are y'all day trading or y'all swing trading? Like what are y'all doing? Are y'all building the trade plans out and then trying to execute from the trade plan, or are you just trying to look at something in the market and jump in? And how are you doing it?
I use the 2 hour trigger trade plans that Creole does, and I do those myself as well because I really like his approach. And once I figured out his, how his trade plan worked, then I started asking Black Wolf for a similar format or same format, really. So that's what I try to use is the 2 hour trigger. And but I think it was Oh, I don't know. I watched a few videos over the last couple of days, but I reviewed the one again where you were talking about using the lock candle as a rectangle and entering on a breakout
Mhm.
from that. So I don't know, but I really like that 2 hour trigger because you can be in and out of a trade w within the same day or even the next day or,
Yeah, yeah.
3 days at the most. And
Mhm.
I like that approach a lot.
Yeah, the 2 hour time frame is one of my favorite time frames too. That's why when I was teaching, I teach the 2 hour a lot, especially if you're going to swing more than one day, because it's only good for a half a week. You know what I'm saying? Like a half a week trade, 2 days to 3 days, because you're looking for 6 to 10 candles to get to a target. And so yeah, the 2 hour is a great time frame to get your confirmation or close above a 2 hour candle on that time frame will help you if you had the confirmation. What about other people? What time frame are y'all using or y'all putting y'all trade plans in? Go
So
ahead.
right now I'm doing options. So I at least I alternate between the 4 hour, the 1 hour, and then I keep the 15 and I alternate between the 5 minute and the 1 minute, just kind of giving myself self a little bit of a kind of like see where it's going and if it's actually continuing. Actually, I didn't real. You just gave me the aha moment where it closes above the candle. It's a continuation. So that gave me an aha moment of how I should play instead. Because I think that's where I've been going wrong. Trying to figure out where the candle is actually going.
I got
Yeah, yeah, I agree with Melissa. That's been my challenge. My entries are really good, spot on. And I am using the trade plan, but I always, not always, but a lot of times get stuck on, okay, when am I getting out of here? What's my exit? So that example that you gave about the candle being higher or lower, that's when you know kind of the direction.
That's right. Okay. Anybody else?
I normally use the 5 minute
Mm-hmm.
and I start trying to build trade plans, but my interest just has been bad or I don't follow through with the plan.
Okay. I got you. All right. So what do I mean when I say building a zone around the lock candle? So even if you get a trade plan from Black Wolf, right, and say you're using the 2 hour, which is a time frame I teach a lot is the 2 hour, or you can go down to the minutes that make the 2 hour, right? And so what do I mean by building a zone around a candle that's a lock candle, right? And so what that looks like is so if I was here, right, say we were in this pullback, right? We're in this pullback and we get this lock candle here, right? So let's zoom into it. This is MU. And so putting a zone around the lock candle, right? It gives you, so we know that the on the 2 hour time frame, it has lost to 12, right? So it's in this downtrend, it has a bearish arc. So our bias when we take the trades, we need to be looking for downside moves. If you try to get inside of a uptrend move, you want to kind of scalp that, right? So if I go into replay mode and you treat that candle, it doesn't matter which time frame you're on. If you get the confirmation on the 15, that will allow you to drop down to your lower time frame. So if you trade on the 2 hour time frame, you want to drop down at least two time frames to look for an entry, you know what I'm saying, a precision entry, right? So now when I drop down to the 30 minute with the same lock counter from the 2 hour time frame, we can see that it's above the 200. But see, what you're looking for is weakness, and you can see the trade better if you come down to the lower time frame. You're either looking for it to break above or you're looking for it to break down under where this lock candle formed at. So this is the high and the low of that lock candle, and it gives you like a type of ORB style box right here, right? So now if we go through each one of these candles, you see how you can see how the you see how on the 30-minute time frame, you see how the high of that lock candle from the 2 hour chart is working as strong resistance every time they try to break through this box. I'm sitting here watching how it's dropping, right? Then you also see yourself creating this bearish arc on that time frame, right? So let's continue to see how it played out, right? Now you see how it put us in this another look at now. Look at if we look here, we end up getting another bearish arc. Price kept rejecting, so price is stuck under this lock candle zone. Look how much price is respecting it now that you have isolated the confirmation candle and dropped down to a lower time frame. You can see how the price action looks by using that zone, so the high and the low of that lock candle, and looking for a bearish momentum in that direction. You still was able to play it down to here, and it's trying to break out. But the other side of that is that if price can get above this level and say we close above here, that gives you the breakout range and the breakdown range by you knowing the high and the low of that lock candle. So like let's take that to like the SPY or something like that, or whatever other stocks you guys like to trade. But if we looked at Zum, for example, we look at Zum since it's been having like decent moves. Let's take it out of replay mode. Now this is just showing you guys how to get less drawdown on your entries. Now I'm gonna show you guys how do you exit. You know what I'm saying? When do you exit out of a trade? It's the wolf chart is gonna tell you a few things about what your strike price needs to be. Even if you're doing like the full out trade plan for Black Wolf will tell you what your strike range and expiration needs to be as well. But we're just trying to for now we're just looking at different ways to enter in off of the lock candles and stuff like that, right? So like this is a good example of you see how we have a lock candle here. Let's see if we got one on the 2 hour. We'll start at the 2 hour. And then the next example we'll do one from like the 15 or the 30, a lower time frame like you all talked about. Now, when you're trying to time this candle, so we have a lock candle here, right? This is a gap. I think this not out. I don't know if that's a gap up or not. But we have this lock candle right here, so we will isolate it from there. And you can do the same strategy if you get a daily time frame inverse arc. You would drop back to the 2 hour, right? Because you would drop from the daily, so the 4 hour, then the 2 hour would be your precision entry time frame. So we isolated this candle on Exxon right after it had locked. Let's start a new one. So isolating this candle, it doesn't matter how low you go after you isolate this, as long as you see how we have this fresh inverse arc right here. If you're a 5 minute time frame trader, a 15 minute, you don't have to go to the 30 minute. You can drop down. If you like the 5 minute, you're gonna see that the price is gonna be stuck in that same lock candle box. And then it also gives you some more perspective on the smaller time frame breakout. So you already got confirmation from the 2 hour. And then the other assets that we have in the wolf chart, like the wolf trend hunter, will tell you the overall trend. And so you can see where your resistance is right now, even if it broke out right now and it closed above this level. We know that we got to take profit when it gets right here, but closing above 152.58 is what's going to send it up higher, right? And so if we look at this example, we know where our lock candle range is, and you just want to see, you will play it out. So it actually gapped up, but we're holding that. You see how now, even though we gapped up and we came back the next day, what I want you all to pay attention to is what a retest was and how price is still going to respect that high of that lock candle, right? So this is like if we did this lock candle in real time on that date at that lock candle, price still came down after pushing up and doing all this, cleared that order block. Price came right back down almost to the penny. Um, and showing you the importance of that lock candle. You see how price came right back down to the top of that high as the break retest, and then it started to push through this order block. Now, Exxon is up here at this order block, but we swept liquidity right there. But it has a stronger catalyst, so it's able to kind of close above those order blocks, with more power. But the technique I'm showing you guys is that even if you do if you get the lock candle from the 5 minute time frame, like we're just gonna pick lock candles and use the same strategy, right? So we're gonna go on the 5 minute of Zum, and we're just gonna look at that previous bearish lock candle and see if you drop down to the 1 minute. Like it was one person on the call said, I'd like to trade the 1 minute chart, right? And so all you need to do is find a decent, like this is a beautiful, like bearish arc. right? So we're rejecting inside of a swing order block the darker red ones, and so we have this lock candle here, right? So this is our lock candle right here. And so we grabbed it because the line is crossed over and this candle is closed while it's locked. We're gonna go to the top of that wick to the bottom of the wick here. All right. And let's just go on replay because see in replay mode, you'll be able to see more of kind of what does this environment look like at the time of that lock candle, which is the most important thing. Because when you look at stuff after it's happened, it looks clear, but it doesn't feel clear in live. So what you want to always do is go in replay mode and look at these lock candles and see, okay, was it an order block under that thing? Was it like a green order block under there? Because in live trading, you might have the same setup, but it may be a bullish order block sitting under there that's making you not want to take the trade, right? And so let's see what it looked like in real time. Because this is a good location. Like the location would have piqued my interest to take the trade. And then if we have like an A plus trade under us, that'll make even more sense once you get the bearish arc. You can still play it from the 1 minute or 3 minute. But see now, so my trade, looking at this trade from here, if I was playing this trade, what I would look at is two things. Okay, I got a 5 minute candle bearish arc, right? I have it inside of a swing order block. That piques my interest of taking the trade. The other thing that will make me want to wait, and I say, okay, the trigger time frame for Zum to break down. Like if it doesn't have this order block on the 3 minute, so let's look on the 3 minute because I didn't let it set on the 5 minute. Whatever the highest time frame from that 1 minute that has that order block, that exact order block in that range, that's what it will have to close a candle under to set that trade up for puts. So we have this is at 150. Let me see the low of this one. 156.26. That's on the 5 minute chart. I mean, that's 3 minute chart. And let's go to the 5 minute and see if they have an order block. Now, this, if you can understand this technique after I get done, I'm gonna go over a few examples. It'll help you, you know what I'm saying, when you're looking for timing, getting into a trade. Now you see here, we don't have another order block all the way down into 155 down here. So this is the 5 minute chart. So now let's go back to our 1 minute and let's look at the low of that order block so that we can see it. And so I also gave you guys these type of order blocks, these supply and demand ones, so y'all can see, you know what I'm saying, where you can get these possible liquidity sweeps as well. So I think let me see what's the low of this one. This is 156.65. And let me go back to this 3 minute one right quick.
When you say order block, are you referring to the candle or are you referring to the supply zone? Because I was actually talking to Black Wolf this morning, going through a couple things, and
Mhm.
he gave me a list and mentioned, for location, supply zone, demand zone, order block, and I asked him, isn't a supply zone or demand zone an order block? Like, what's the difference? So I missed what you just said there about order block because I didn't see one.
So these green zones on our charts are order blocks.
Yeah.
Okay. Now you will hear people use them interchangeably, supply zone, demand zone. So if you see a green order block, a person will call this a demand zone. And if you see a red order block, a red zone, the long ones like this, they call that a supply zone.
Mm-hmm.
Now, they're technically different, but they serve like kind of like the same purpose. So that's why when I gave you guys the supply and demand zone, you see sometimes a demand zone will be within inside of these order blocks, and sometimes they'll be outside of the order block, right? And
Yeah.
so the difference between a supply zone and a supply zone and an order block is that a order block, like these green ones right here, these are accumulation zones. They show institution accumulation where they will be, on routine buying shares and buying, stuff like that.
Mm-hmm.
A supply zone is well, I'll say this right here. An order block is mainly just only for institutional money tracking. Okay. So
Mm-hmm.
only it's only trying to pick up where institutions, not retail traders, not you and I, but only where institutions have bought and sold and where they're accumulating shares and stuff like that. That's what order blocks are for. And like
Mm-hmm.
the order books. A supply zone is like a overall market reaction zone where supply or demand came in. It can be like really impulse selling. You'll see these pop up after earnings, and stock will drop really aggressive. Not because the institution was up there selling and things like that, or buying puts ahead of time, but because that was just an impulse high volume sell order that included both the retail investors and the institutional investors at the same time deciding to dump a stock at a level or jump in
Mm-hmm.
and buy a stock at a level with a bunch of money.
Mm-hmm.
So that's
So
what you're.
when you draw your box around the lock candle, that doesn't become your sort of hypothetical order block, or does
No,
it?
not no. It's near order block, but it's not really an order block. It's just a
Okay.
candle. It's just a candle that gives us where their money and transactions were very
Mm-hmm.
close to happening at, but it doesn't necessarily end up being the actual order block.
Okay.
But it's like right under the order block where the order block will be at.
Yeah. Okay.
Mm. Like this order block, for example, on this time frame, you see how if we got our lock candle over here, right? You see how this order block popped up here.
Yeah.
But if I go back to that, if I go back to the inverse arc, if I go back to this inverse arc and show you why we're so the reason why we trust the WTMA arcing like that is because you see how we're up here, everything looks fine, right? And now we have a lock candle right here, right? So we got this lock candle here, right?
Mm-hmm.
And so if we put this box on this lock candle for the 1 minute chart, so now we know that we have this lock candle here, and you see how there's no order block up here or supply zone.
Yeah.
Now look you see where the WTMA is though.
Mm-hmm.
Now we keep on going.
Now,
Look at the position of where the supply zone is and where the order block popped up at. So the
yeah.
W so the Du- so our advantage is that the WTMA comes to the exact almost to the penny to the exact spot and shows hey, they're buying puts it, or this is where they're selling at. Okay. But then
Mm-hmm.
the rest of the smart money users that use order blocks, they will know at this candle. So we knew at this candle, and then they knew 1, 2, 3, 4, 5, 6, 7, 8, like nine candles later. You understand what I'm saying? So that's why it'll sometimes feel early when you get into a trade, because even though they built their position, they may not be ready for it to just drop and just sell off. But what we know is that they have got they have started selling because the WTMA has crossed.
Mm-hmm.
You know what I'm saying?
Yeah.
Yeah. So back to this other example where we had the 5 minute lock candle. Waiting on a price to clear an order block is the safest way to know that you're going to get continuation. So we cleared this order block on the 3 minute. The 5 minute didn't have that same order block. I think the 5 minute had this order block. So when you're trading and you see that a a, a, a higher time frame has an order block that another one doesn't. So when we cleared this, even though it came back up and retested, once you clear that order block, that gives the signal that okay, once that last line in the sand is gone, because it's not on the 5 minute. So we go to the 5 minute now, we can see that it probably price came down to that 5 minute time frames order block. But the one that was sitting here in the middle that was blocking us on the 3 minute, once you close under that, as long as there's not a higher time frame with an order block in that same position, that will allow price to drop down to test the 5 minutes. So you see how price dropped down and came right to the tip of the 5 minute order block, but it was only after the 3 minute time frame was able to clear its order block. Did everybody catch that, or y'all need me to play that back one more time?
Can you play it one more time?
Okay.
Hey Sean, does the liquidity mapping already put those blocks around the lock candle?
Yeah. Yeah.
Okay.
All right. So now we're back here at this lock counter right here, but you see how we have this order block in the way? I think that was Melissa who popped in. You see how we had this order block right here?
Yes.
All right.
Yes.
So now, but if I go to the 5 minute chart, if I go to the 5 minute chart, we'll see that the 5 minute only has that, it has all this wide open
All
right here.
right.
It's going to have all this wide open, but this order block is going to be down lower, right? You see how the 5 minute has this order block way down here, but it doesn't have that higher order block.
Yeah.
Whenever you see that, this is how you know when the stock is going to be ready to drop down. Is you want it to clear, since we had this order block on the 1 minute and we had the same order block, it's going to pop up. But because we had this order block on the 1 minute and we have it on the 3 minute, but then when we went to the 5 minute, it didn't exist. That means that the
Mm-hmm.
highest time frame that has that order block represented is this 3 minute one. So in order for us to go down further to that 5 minute order block to get that trade for puts,
Mm-hmm.
in order for it to reach this order block down here, which is on the 5 minute chart, we just need price to close under on a 156 156.26, right? This order
Okay.
block is what's in the way of you having a good put easy trade down to this order block, right? Down to this order block on the 5 minute
Yeah.
chart. So when you see this, and you're gonna see this almost every day in the stock market, depending on what stock you're looking at. But you know, when you're on a lower time frame, you will see these order blocks on there. And so when you see that, you just want to candle, you want to wait. You don't want to be trading puts while this is here, right? So you just want to wait until a candle closes under that. So you see how this candle closed under it?
Yes.
Now, because this candle closed under that order block, now the trade is open to come down and test this 155.
Got it.
You get what I'm saying? And so
Yeah.
so even though like right now the trade we since we can see it now, the trade is gonna pull back, right? The trade is gonna pull back and come back up and test. But this is our 5 minute lock candle, right? Look where it's gonna pull back to for the retest. So we gonna push up, and it came to our lock candle location, right? The low of that lock candle from that 5 minute chart and rejected. I'm just trying to show you how this range works on them. And then it did what? Continue straight back down. You see that?
Wow. Okay.
It came right here. Because you know the range of the lock candle, price is gonna come back because the lock candle is not a candle just any candle. It's one of the strongest candles that you can understand the range on because it's attached to the WTMA committing to that downside from the 5 minute chart. So it's no coincidence that anytime you put your ORB little box around the lock candle, look how price just randomly came up. There's nothing even there to stop it. There's no resistance. Resistance is down here. It's not even a resistant line up there other than the low of that lock candle, and it reject twice, made these tweezer tops, and then fell down and came right to the target, right? And so now if we go to the 5 minute chart, you will see that it came right down and wicked off of the top of that order block that was
Oh,
down
wow.
on the five
Okay.
minute time frame, right? And if you would have played
This
it,
makes a lot more sense.
yeah, and if you would have played it straight from the 5 minute chart, it's the same. You got your ORB box on
Hmm.
this. Oh, I'm sorry, I was on the wrong candle. All right, so you got your ORB box here, and it's still just a break retest. You just breaking and retesting and falling down on this thing. But the biggest thing is, so you want to expect some volatility while you're dropping, but as long as you know that you've looked at the time frames under you and you've already understood that, okay, all the little order blocks that can hold price up, once you clear those little ones and there's nothing else to stop it from dropping, it could drop down and hit your targets. So this is where when I'm giving you all the supply and demand um indicator, what I'm trying to help you all to see is that sometimes on certain stocks, you will see supply and demand where there's no order blocks at, right? Especially when stocks are going to like highs and they have rejections. Uh, my supply and demand indicator will show you where resistance is, even if the order blocks are not there yet, because it's still looking at these extremes, right? And sometimes they will line up perfect, but if we go to like a start using like the dailies and stuff like that, on some of these time frames where order blocks hadn't appeared yet, or where you're gonna wick at, like for example, you see how we keep breaking above the high of this daily time frame order block on SPY, but
Yeah.
you still rejecting inside of the supply zone, so you just sweeping liquidity and coming right back down. It's going to position itself where you can actually see the true range of like the supply zones and stuff like that, right? And so you want to get used to seeing these, and sometimes on the lower time frame, like I was using this on I forgot what trade I called. I think it might have been SPY on what was that, Friday. Let's go back and look at it. We had to put it in replay.
Yeah, it was SPY. You had it on the 5 minute.
Yeah, we was on 5 minutes. I think we broke down though. We broke down a lot. Matter of fact, let's see,
Yep.
670. So we'll come back to just replay this so we can look at it. Now, just remember that technique I was just telling you all about something closing under a level or like one of these zones. And if you move up to like the 15-minute chart, so we're looking at this SPY example right here. All right. So we got SPY right here. Let me see what time. It's Thursday. So this is Friday right here. All right. So it's still tied into this order block on this one. And so let's play it out and see. Let's see. So we came right down to that order block. Now, what you want to look for is if you want to get into puts because we're under the 200. I'm saying when you're day trading, if you're trying to execute with puts and you're under the 200, right? So we're under that 200 moving average. And so if I come to the 15-minute chart and you want to see where the zones are on the 15-minute time frame, right? And so sometimes you'll see cases where the 15 and 30 minute don't have a zone right here, but the 30 minute, the 15 does, right? So let's go to the 30 minute. And we're just looking for, okay, when will the chart allow us to come and test 663, right? Or 662, right? And I believe on this one right here, they have to end up closing a 2 hour candle under this. I think they did close the 2 hour candle under this level. Yeah, because I think this range showed up all the way into the 2 hour chart. This range right here. And so I think on the 4 hours, so let's go to the 2 hour right quick. All right, so because this level showed up all the way up into the 2 hour chart, this is why I was saying on Friday that if SPY closes under over, you know what I'm saying, under this supply zone, you see how this supply zone, we got our order blocks turned on, but there's no order block represented here on the chart, right? On the 2 hour chart. It's only just a supply zone here. And you see it's coming off of this extreme bottom, right? So it came down and look how price came down and out of nowhere. There's no support right here. Price came down, but buyers and whatever event happened, they just came in and started buying spot off of price some news or something like that. Retail investors and smart money came in and just started buying spy, and they pushed it up because it was on the drop from 687 all the way down to 663. That's a massive drop, right? In like 2 days or whatever. And so it popped out of there and it left this supply zone on the 2 hour chart. But if you go to the 4 hour chart, I believe this is the one where the 4 hour didn't have it. The 4 hour has its supply zone next all the way down here. So it doesn't have that. It doesn't have that supply zone here. So that would let me know that if SPY started closing candle, or if it closed a 2 hour candle under this level, that's when it will be able to try coming down like to 61. I think it ended up coming down just a little bit toward the end of the day. But because they've lost this zone right here, that means that SPY is wide open. Even if it pushes back up to make a lower high, it's wide open now. The area of interest for SPY now is for it to come down and even press under 650. Right now, SPY needs to come down and press under 650 and then push back up. So it needs to do what we call a sell side liquidity sweep. And that just means that you want to see price push under this order block and then shoot back up, right? You want to see it push under that order block and then shoot back up. So on Friday at 10 in the morning, when I said, okay, if SPY comes down to this level and it's going to pop back up for that first liquidity sweep, and then next it needs to close under another level, and then it will be able to fall down. And so this is the type of stuff I'm looking at. I'm looking at, okay, the 2 hour chart is the highest time frame that represents the supply zone. And then if it closes a 2 hour candle under this zone, it opens it up to start pushing down back to the 650 range. And we can see that if we go into replay, it pushed down to that level, touched it, and end up closing the candle, and it ended the day under that order block, right? So now since that supply zone. So now since it enters the day under that supply zone, even if we get this little pop up, because if you pay attention, what's been happening? We have a high, spot will push down, buyers will step in, and people will start jumping back into leap contracts and swing trades, thinking that the market is recovering. They're just trying to create more buyers so they can sell again, right? And then they'll sell it back off. SPY will bottom out at a new low, right? And then it'll at a lower high. And then what they'll do, they'll put a lot of money back in, they'll buy it, and people say, "Oh my God, the market's trying to reverse," and they'll start buying leap contracts, and they'll buy 6 months out, and they'll be holding it, not understanding that while VIX is above 20, above 27, above 25, it's too volatile to just sit inside a call. You can't treat it like it was 2 months ago. That doesn't work right now. You got to put a day trader hat on. So they're gonna give you your 1.5 days of this, and then what they're gonna do? They're gonna march you all the way back down, take all your money back, right? And then you're gonna panic, and then you're gonna sell, and then you're gonna see it going back up again, and everybody's gonna get excited. They're gonna start buying leap contracts, and they're gonna start buying swing trades. But what are you really doing? You're in a downtrend, right? Look at this. It's just been in a downtrend. You're making a higher low, lower low, higher low. A lower high, lower low, lower high, lower low, lower high, lower low. You're just making this stair step down the whole time. So even if it does what, so it might pop back up and have some kind of impulse type of scenario where it comes up and it comes to 665, or it comes to even 680 something, right? This isn't over with unless you see how we got to change the character. That's bearish. That means the uptrend has changed. Then we got to break a structure. Then we just ended the day on another what? Break a structure, right? Look at this break a structure. What happened after this break a structure? You just push down for a little bit and then you push back up because you're trying to set up to do what? Break structure again. So you're in this, you got to start paying attention to the downtrend pattern. And so now it's a possibility that we can pop back up to put in a lower high, right? Maybe hit the previous month low or even just hit the previous day high, something like that. But the destination where the money is sitting at is right here, right? So they need to push people up here, but ultimately they need to try to get some money and some liquidity from down here in this swing order block, right? This swing order block hasn't been tested since November the 20th of 2025, right? So when they came down here last time, they bust price all the way up to all-time highs. You can see we in this big, huge, so we're going to come here, right? And so this is a high probability area, saying? It's not guaranteed to come here, but this is where the money is sitting at. So when I look at this chart, my brain automatically says, hey, okay, we might have this push up, but when SPY price gets under the low of this order block, this swing order block, this low is 650.85. So you're going to see, once they're pushing down, you're going to see me put a message in the Discord. I'm going to say, hey, when price gets under 650.85, you're on a high swing side liquidity watch. You can get trapped because if they push price under here, because this is the first retest, the price is going to push under here and it's going to skyrocket right back out. So what you would know, what you want to see is you want to see price come under here and you want to see buyers step in and then you want to see price close back above 656.64. If you see that happen and then you see an inverse arc on this 2 hour chart, they're going to take their time stair stepping back up, but they're trying to come here. And then the first time they come here, they're going to push price slightly above 683.60. And it's going to, because it's the first retest, it's going to sweep liquidity and it's going to drag right back down to 675 and it's going to consolidate, ping pong around in this range, trying to fight to get back above this order block. But, you know what I'm saying? Like you can, once you start understanding that smart money, they don't look at stock market like we do. They just push price. Their job is to push price to liquidity. So if they want to buy into SPY to try to play the next round of earnings, whenever the next round of earnings is coming up, you're going to see them push price. They're going to sell it off aggressively, and they're going to come all the way down, and they're going to come to an order block, and then they're going to push price slightly under it and push it back up. But why is this a high probability zone? Because if I look at my 2 hour and then I look at my 4 hour, right? I let my order blocks pop up. This is a swing order block that's untested, right? So it's a lot. That's a lot of money sitting here with a demand zone tied into it, right? And then if I go to my daily chart, we can see that we're already at the 200 and inside of a order block, and we have a demand zone sitting at right here on top of historical support and resistance, right? So they're going to play around in this range, but mark my word, once they push this price under this level, if you're still hammering down puts, they're going to suck all your money out. They're going to use you down here to get enough liquidity to start trying to push that price back up. And they're always gonna, unless something really bad happened, like a nuke or something like that. Now, when stuff like nuclear war or something happens just like extremely globally bad, then price can cut through all this stuff and keep going down if the catalyst is strong enough. If it's just, saying what's happening right now, they're gonna use that fear and push price down, and they're gonna do what's called a sell side liquidity sweep. The sell side liquidity means that they're just gonna push price down inside of the bullish order block. So the reason why they call it a sell side liquidity sweep is because think about the title of it being the victim. You know what I'm saying? They trying to create fear in sellers. So they need sellers in order for them to buy. So they call it a sell side sweep. It's a sell side because if I can scare the crap out of you by pushing price down really aggressive and you get spooked and you start just hitting the sell button and so just like anything else, like the housing market or anything, I cannot buy a house if nobody's willing to sell. I can't buy a neighborhood if everybody in the neighborhood don't want to sell. I can't buy farmers' land if all the farmers saying I'm not selling. But if I put some locusts out there and put some fear out there, and everybody's like, "Oh my God, like I'm gonna go out of business. This ain't. I'm finna. The world is coming to an end. I'm going to sell. If I got and I'm trying to buy, I just created the customer. I just created what I needed. I want to buy, so I need somebody willing to sell. So when they do a sell side sweep, they're trying to create sellers so that they can have their money sitting down here and they can buy to get in to the play, right? And so that's what they're trying to. So that's why it's called a sell side sweep. When you see them pushing price up above an order block and then snatching it back down, when they're doing that, it's called a buy side sweep. Why? Because they're trying to create a bunch of FOMO. When they're pushing price up and they're pushing price up, and it's just look like it's never going to end like they did on silver and gold, right? It's like never ending push up, and you see them pushing the price and pushing the price and pushing the price, right? And so they're trying to create what's called FOMO. And what that is, people start saying, oh my, and you start seeing these Morgan Stanley has raised the price target of gold to $350, and you see gold at whatever price is at, and you think, okay, man, that's another 50, 60, 70, 80, $100 away from the current price. And so you think you're buying a deal, and then next you know they just pull out of it. Well, what were they doing? They needed, but they want to sell, but how can they sell something that nobody's willing to buy? So they had to make it attractive to make create this buy volume liquidity. That's why it's called a buy side sweep. They're going to create buyers and they're going to sweep the rug from right under your feet because they've created enough FOMO to create a greater fool at the top. So they want to say, okay, I'm going to push the price up. I'm going to make it look like it's breaking out, and they're attacking two people. Some people are going to put their stop loss right on the other side of this demand zone, right? I mean the supply zone. Some people are going to try to buy the breakout. Soon as price peak his head just a little bit above this level, they're going to hit the buy button. So and so they're trying to create enough liquidity right here. So when they push price above it, that people are willing to buy, and then they just dump their bags and sell it because they have somebody willing to buy it. So once you get that just drilled down into your head that they don't care about head and shoulder patterns, they don't care about cup and handles, they don't care about none of that. They do care about, the 12, the 100, the 200 and things like that, but other stuff that we use to trade, they don't care about. Go ahead, Erica.
So that all makes sense, but so my only question here, like on SPY, because I'm never in that channel. I don't try to trade it. But what is what would be the originating time frame, like the confirmation time frame? Because when you say, or when somebody says they trade the 5 minute, does that mean they are using what time frame for location and all of that? Like, where would this trade have started? What time frame? I seem to be really stuck on that aspect of things.
So it's two type of traders, right? Now in our system, in the Wolf chart system, by the book, you want a confirmation to justify your entry time frame. The way I trade and the way I teach people to trade is have a confirmation and then look for an entry time frame on the lower time frame. For example, if you trading on the 2 hour, that means that you already have your trade plan is a confirmation on the higher time frames, or at least alignment with the trend that's justifying you to attack that trade from the 2 hour, because something on the higher time frame has to already be in place. Prices above the WTMA, prices above the 12 or the 200, and then you're just looking for inverse arc or a close over a certain level on the 2 hour time frame to trigger your entry without having a lot of drawdown, right? The same thing is
Okay.
true. The same thing is true for the 5 minute. If you're trading from the 5 minute and day trading, you want a 30-minute time frame at minimum confirmation or trend alignment that you're working with is saying, okay, the reason why this stock is about to go up or down based off of some higher time frame confluence, but I'm going to execute on the 5 minute. And,
Okay.
and that's really, saying, like, you have to be trading like that, or you're gonna some people that scalp, they can be in and out stuff on candles, but if you're trying to trade within the trend, you got to have some higher time frame confluence, even if you execute on the 5 minute.
And you still follow the same sequence, right? Like inverse arc, lock
Hmm.
candle on the lower time frame, change a character,
That's correct.
and a small pullback, and
That's
then
correct.
enter, right? Yeah. Okay.
Yeah, that's correct. Hmm.
Okay. I seem to
All right,
get
go.
very confused on that.
Oh, I see Melissa's hand. What's up?
Hey, so I last week I started seeing something similar to what you were just showing us with putting it into a range.
Hmm.
And so I think it was like I want to look at my boxes here because I started doing what you were doing is putting it into a range. When it breaks out of that range, that would be my signal to actually get in
Hmm.
because it felt like everything was really bouncing all week long. Like
Yeah.
you couldn't really get into a play and know that you're going to actually make money. And I I did what you were saying a few minutes ago is like I freak out, go like no,
Yeah.
and I don't want to make myself an emotional person in doing this. And so my husband was teaching me some things that you were teaching him as well. And so when we found this training, it was kind of like, okay, maybe this might help you get your mind in that mindset. And so this kind of proves what I was doing in a sense that I was boxing it in on Friday. So when it broke out of a range on QQQ, I kind of knew that I was going to make the money. And so it was like it was at 9:30. It was just staying in a range
That's
of
right. Mm.
it was just crazy range, and I couldn't figure out if I wanted to get in or if I wanted to get out. And so my problem is where I put my stop losses at, because sometimes I play with my stop losses where I'll slide it up, but then when I see it start, you know how it keeps on popping, I
Hmm.
always slide it right back down right away before it hits my stop loss. Do I should I do that? I mean, like, I don't want to play with my money, but
Oh,
I don't want to be stopped out on money.
yeah. So when you do your stop loss, you want to have it at I'm gonna have to get us a. I put a stop loss calculator in some of the wolf charts, not all of them, but some of them have a stop loss calculator in them that's based off the ATR. But you really have to base your stop loss off the ATR of your confirmation time frame. And so if you get in on the 15 minute, you see how it's telling me what my ATR is right here
Mm-hmm.
for Bitcoin, right? But this isn't an
Yeah.
option. But inside of let me see if this is the one of the wolf charts with this delta. Now this isn't the right version. Hold on, I'm gonna show you, and you all can start playing with it. If you subscribe to the wolf chart, I think it's in that version. Matter of fact, let's see.
Yeah, I'm looking at it right now.
Yeah, so inside of that one, um, so is this the right one? Trying to see which one I put it in. Delta. Hold on. Got too many indicators, guys. Got too many wolf charts. Let's see. Oh no, I have to send. I'm gonna send a screen. It's some of the wolf charts it has in. I have to go look at my Anyway, it has like the what do you need? It has all the Greeks in there that you would need if you went on like Robinhood or your broker and wanted to put literally every Greek in there to get the actual price, and it will automatically calculate the stop loss that the advanced ATR tracker. So I upgraded some of them. I'm going to apply that upgrade to all other charts. But I was seeing some of you all might have it. If you open your ATR track up and scroll inside your settings, I mean, if you double click on it and scroll down, you might see that longer list of Greeks that you can put in. But that you don't want to be sliding your stop loss along because you're just going to create you. So you put your stop loss in. If you're putting it in if well, I put it like this: if you put it in in this plan, how you put it in, you want to kind of leave it alone. If you get stopped out, then you get stopped out. If it's in the right spot, but it has to be ATR based. And the reason why you want your stop loss to be ATR based is because you see how on Bitcoin it says that on a daily time frame, Bitcoin can move $2,870.43, right? Now,
Mm-hmm.
what it's saying is that's the normal volatility of Bitcoin. So people, the smart money are going to push that stock around within that volatility scope, right? And so as long as you have your stop loss set out a little bit outside of that, like at 1.2 or 1.25 times the ATR, that puts you out of normal volatility so you can sit in the trade as it's trying to hit a target. But when you have your stop loss too tight, you know what I'm saying, or just ties to just a structure point, sometimes you can get stopped out earlier. Another good spot to put a stop loss is a little bit under like your say you had your inverse arc on top of your
Hmm.
12. Sometimes I put my stop loss under under the count the I sometimes I use a couple different things. I use the ATR mainly, but if I'm not going to use the ATR like on a smaller time frame, I use the low of the lock candle, and I'll use that as a stop loss. I use that
Okay.
sometimes as stop loss. Yeah.
So I also noticed the other day when the 15, the 1 hour, and the 5 minute were all doing the arc at the same time.
Hmm.
That's when it gave me the hint that it was going. I that when she was talking about how do you know is that's when I was sitting there going like, yeah, I started seeing some of the arcs on some of the lower time frames and the higher time frames at the same time. And
Hmm.
that's when you pretty much know where it's gonna go.
Yeah, yep. See, so that's just having that confluence between the higher time frame and the lower. So basically, that's the same thing as say if you saw the inverse arc on the 1 hour, right? And
Hmm.
say you put a zone around your lock candle. If you went to the 5 minute, right, and then you waited for a arc in that same direction, you're just going to see that the 1 hour time frame and that 5 minute, or if you waited for the same thing on the 15, when they start aligning, so that's when. And if you just stayed on the 1 hour time frame, what you're going to see a candle, that preceding candle closing over the high of that lock candle. But on the smaller
Hmm.
time frame, it looks like all the inverse arcs are starting to arc in the same direction. All their slopes are aligning, but it gets us to the same destination, which is having price align with the overall trend. That zone that you put around a lock candle, what that does psychologically is it forces you to be patient and stop asking too many questions. To like, okay, so when do I get in? If you get a bearish arc like this right here, if you get a bearish arc, and then you put a zone around the candle, lock candle, and you drop to the lower time frames, it's just going to make you have to be patient and wait for that price to get under. No matter what time frame you drop to, it's going to make you have to wait until you get under the price of that low, and then all you're going to be looking for is bearish arcs in the direction of this bearish arc. So like even if we took this example and did that to Bitcoin's candle here, we could pick a time frame after we got that candle, right? And if you like trading on the hourly, if you like trading on the 5 minute, you know what I'm saying, whatever time frame you want to trade on, or the 15 minute, the thing that you want to be looking for on these lower time frames is because we know that this is prices are going to be weaker under this lock candle low. When you start getting bearish arcs in alignment with this especially fresh ones, fresh new ones, right? Once you start getting bearish arcs aligning with this time frame, that's how you know that the stock price is going to kind of try to go continuation down, right? And so let me get this. This is what time frame is that? I'll put a 30 minute on this one. This is the 15 BTC. Bro, why do they look so different? Oh, this is not in replay mode. That's why. All right. I don't think we can do both of them. Let's put it like this, keep it like this. So even if you didn't play the first one, if you waited for price to come up and you waited for a inverse arc, a bearish arc to align with the higher time frame arc, that's what you really want to wait on, right? So we're on this time frame now, right? And it's breaking down. What I'll be playing on this trade, I'll be looking for breakdown arcs. I wouldn't care about you see how it's popping up. I take a trade like that. I take a trade like that. But all I'm looking for, because I know price is bearish, I don't care about this trade. Like people can take that trade. I'm looking for this lock count. All I'm looking for the whole time on the lower time frame. If I know Bitcoin has a bearish inverse arc, you can take these scalps right here, but I'm under my 200 on the 15 minute. I'm under the 200, so I know price is bearish. So I don't care about when I trade if the overall trend is a bearish arc, right? Even though the price is popping up, this all I'm using this is ways for me to get higher quality bearish setups. Like my mind automatically goes to, okay, I just want can if price could just I be cheering it on. Please just come up to the 200 or to this bearish order block so I can get another bearish arc. Like I don't care about none of this popping up, none of that because I'm under the 200. So anytime something pops up, I'm just looking and trying to fade the pop up because I know when I go back here, I know that I'm dealing with a bearish stock. You understand what I'm saying? So when you see that your trend on the higher time frame is just bearish, you don't want to be chasing um you don't want to be chasing the pop ups. You want to be chasing those down moves, right? Especially if price comes in close like down here. I'm not interested in the price action if Bitcoin is like playing around inside of a bullish order block. What I'm interested in is okay. I'm just waiting on the day that it closes under 86,300 because if I go, what I would check is the 3 day. Well, it has a lot of order blocks on this one, so this is just more so of Bitcoin is playing out. Now we know that it's down in this range now, but in real time, if Bitcoin is inside of these type of order blocks right here, and you're stuck like this, you just stuck in kind of a choppy range on Bitcoin. Now on the lower time frame, when we saw that first move, it was cool to play that move, but looking at it overall, and like if I was trading this in real life with us being stuck like this is unattractive to me until it closes under the order blocks. So let's see on the higher time frame where the order block ends at and where I would have played puts because I would still be looking for it to bounce out of that. But see right here, you see how we don't have an order block until we get back down to 76. So for puts, the way I would call this out to you guys is that Bitcoin would need to close a 3 day candle under 81 265.16, and then that would set it up to drop down to 75,000, right? Because all these order blocks are stacked up and we're sitting inside of all these order blocks. So you're just gonna get choppy price action. So anytime you see your price, your 200 and your price is just sandwiched between bullish and bearish bias, this right here is called compression in smart money terms. So they just compressing price and they're going to try to push it aggressively in either direction, right? But so let me ask somebody this question: what is the trading like? If you looked at Bitcoin chart and you said, and somebody said, "Hey, how do I trade this? How do you trade this right here?" By just looking at this 3 day chart, we know that these order blocks don't appear on the weekly. Our next support level down here is here. We didn't see any supply zones right here, so we're gonna either come here to 108 114 or we coming somewhere else. So how would y'all trade this when y'all see this?
I'd ask Black Wolf for a trade plan. I don't think I would enter anything here unless because I don't see an arc on the 3 day.
Mm-hmm.
There's no crossover yet. Price is sitting in a demand zone, but it's below the 200.
Mm. Okay.
Uh that so to me that would be bearish on a higher time frame,
Mm.
but there's no clear direction.
Right. And who else got some extra input for that?
Just wait on the lock candle, draw your zone, and then drop down to the lower time frame.
Okay. Anybody else? Johnny, what would you do on this?
It looks like sell side liquidity.
Yeah, you can wait for a sell sign. Now we already got one right here. This is a perfect example of the first. See, why when Coach say you can kind of read the book on the first retest, you see how Bitcoin was just dropping, 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 dropping.
Mm-hmm.
So when they got to this order block on that first attempt, you see how long this wick is? Can y'all see that wick? Let me zoom into it.
Yeah.
Y'all see it? Can y'all see this wick right here on this candle?
Yeah.
Yes.
So this is what Coach talk about when I say when you can see a stock dropping down, and I say it's gonna push right past that order block, and then you're gonna see buyers step in and push it all the way back out, close above the order block. That means that they just swept liquidity to push it up, right? Now this doesn't look all that great, right, from Bitcoin, but from Bitcoin perspective, closing doing this type of move, it went down to 80,000, closed at 86, and then went as high as 94. So that's a pretty big liquidity sweep. All right. But so here we already had one liquidity sweep of this zone. And so the first thing you want to do is, like Erica said, you want to throw this in Black Wolf to kind of get an overall top-down analysis on Bitcoin, right? And what is it trying to do? What is it? What is Bitcoin trying to do in this range? Now, let me ask you this question. If you did go to Black Wolf to get a top down on this, because this is clearly they're chopping people up right here, right? Because it's under the 200. You got order block stacked right here. If you get an inverse arc or a fresh inverse arc or something like that, or if you get a bearish arc, the bearish arc is going to try to push you down deeper into this, but you're just breaking into order blocks, right? So you push. So when you see these order blocks, we know these are the accumulation zones of the billionaires and stuff. So what's happening as you're pushing down into them? You're just triggering, known places where they have buy orders and stuff like that. So when you're pushing down, it's not a coincidence that if you pay attention, every time we get inside of this order block, look at this wick. We came down here and touched it. That's a wick. And now look what we're doing. Because we got sell pressure above us, we wicking back down and we wicking inside these buy orders. So they selling us down and they pushing us back up. They selling us down and it's pushing us back up. And then they try to get above it. But then when they push back into it, you see this other wick. So that whole ride down, it's going to take a lot of sell volume to push you through all this. So this is a whole battlefield right here. Now, with me eyeballing this, since I've always traded in this style, I'm waiting for a candle to close under the low of this order block. Even when I put my trade plan, if you put a trade plan in the Black Wolf, what I'm saying, like we're looking either to get above the 200, right, and hold above the 200 to push up to test this, or you're trying to get under this 81. My mind would tell me I don't have any permission to be trading in this current range because it's undecided, right? You can make, if you're scalping, you can trade this, but overall, you know what I'm saying, like it's a bad range to try to trade Bitcoin, right? Will everybody agree with that?
Yes.
Yes.
But if
Absolutely.
Right, but if we close under
So
this
technically,
zone,
I know there is no trade.
right, that's right. That it's some trades on a lower time frame if you're scalping, but it's really no clear. There's no clear winner here, right? There's no clear winner right here. It's like this is just a fight, right here.
It
Uh,
feels like that's what the whole week of last week looked like.
yeah, exactly. But see, if you look at now, so why does it feel that way? Let's look at SPY. Let's look at SPY for a second and show you why it feels like it's no clear
Because it
direction.
felt like we just sat in a very tight coil. Like,
Yeah.
even if you looked tight enough into it,
Mhm.
you could see that it coiled within each other, and you never knew where the lines were actually going until they actually went.
That's right. So when you experience that, you always, so the quicker you can find while VIX is high, the quicker you can find the range, you can dominate the range. If you don't know the range, don't trade until they break either under order block or above an order block. Right now, look at the proximity of this supply zone to this. Now this is a daily time frame, 680 to 690. We're in this little, this range now. But look at our previous candles before we had this gap down. We were just kind of like in this same little box right here, right? And so SPY is trying to break down. They're trying to get it, to come down and come down to these lower levels. Um, oh, I'm sorry. We've already broke down past those levels. But SPY, when you see SPY going back and forth like that tight, just understand if you zoom out, like I already showed you guys, it's already revealing the pattern. One thing you can do when you're trying to look for and try to kind of see a trend easier, if you kind of turn your line chart on, you can kind of see those peaks and kind of see that downtrend. You see how, like, we're not breaking over these highs of these lines, right? So we're just in this like downtrend, right? Where you're making, a lower high, a lower high, a lower high. And you got a lower low, and then we're back down here to this lower low. Versus when you're in the uptrend, it's kind of the opposite, right? You got a higher high, higher low, higher high, higher low, higher high, right? And so we're in a downtrend, guys. So when we popping up, it feel choppy, but they're just consolidating for a little bit, and then they're ready to try to take the next leg down, but they have to build that word again, enough liquidity to sell the stock down, right? And so when you see it choppy like that, what I'm saying, it's just gonna come in a little range for a little while, and they're trying to drop it down, right? And so we know that when we kind of we see a destination right here between 650, 650 and 650.77. So when you're trading, you want to be paying attention to the overall picture, and when you're executing, you want to, after you get your confirmation candle, you want to you can use that box technique. And I'm teaching this box, and we can go over ORB and all that stuff like that on like 5 minutes, stuff like that. But the reason why I'm teaching you this technique of putting that zone around your candle is because you can integrate it really quickly into your Black Wolf trade plans. When he's saying, when you see an inverse arc on a 2 hour, you see a candle that closes above this level right here, or whatever candle, whatever action he telling you to look for before you enter, so you can isolate that candle and go down to the lower time frames to get precision entries, or but you can use this technique with anything in our system, right? So even with the floating candle, which is when I'm talking about the one when we break over the trend line, like with an open and close candle, it'll help you on your drawdown with those. Has anybody been trading any level 3 candles lately?
Uh, not on a lower time frame. I don't think I have.
I have
Okay.
not.
I always
Okay.
get frustrated. I think like because I use mostly the 2 hour time frame, and
Mhm.
I forget to drop to a lower time frame to look for a level 3 floating candle above a trend line. And because the first thing I go is, well, where's the trend line on the 2 hour? If I have to wait that long, the trade's almost over. So
Mm.
I hit a wall when I was trying to understand that. So I still run into that a little bit, but I understand it now, I think. Like you get your phase one
Mhm.
and your lock candle on your 2 hour. As soon as you get your lock candle or even your arc, your or inverse arc, you drop to the 15-minute and look for your level 3.
Yeah, so yeah,
So
so the level 3 is, it's at level 3 because it is a late entry. It's a momentum entry, but it's just, if you missed the inverse arc and you missed the reclaim of the 12 cloud, which means price is holding above the 12 cloud,
mhm,
it has retested it, and so it has reclaimed that position either above or under the 12 cloud. The level 3 is the next entry, what I'm saying, in the system.
mhm,
So the entry system covers, whether you're early, whether you're getting in the middle of the trend shift, or if you're getting in at the momentum breakout at the tail end of the trade. It just gives you 3 ways to get into the trade through a system, right? And
and
so,
that applies to regardless of the time frame. Like if you see an inverse arc on the 30-minute time frame, you can drop to the 5-minute or
mhm,
lower, I suppose, and find your level 3 there, right?
that's correct.
Yeah,
That's
okay.
correct. So this is a good example right here. So let's look at this example. I was trying to find one that just wasn't a gap, since price has been gapping down and stuff so much. It's hard to kind of just find like some price action. So look at this bearish level 3 candle, right? But you had this pullback, right? So how do you deal with that, right? This is why we come here and let's go look at this level 3 entry. So for a level 3, you just want price to be bearish, right? You're looking for a few things for a level 3. So we already got our inverse arc right here, and this happens to be kind of, anytime you see, so a couple of patterns you want to get your eyes used to seeing. Whenever you see the 12 cloud get skinny like this right here, you see how wide the 12 cloud is right here. This
Yeah.
is when this is when it's harder to get above it. That's when it's trying to act as support. But when you see it start thinning out like this right here, that's when it's trying to, when it starts sloping down and it's thinned, it's trying to allow price to just go under it or above it when it's thin like that. But
Hmm.
more importantly, when you see an inverse arc and then price committing to a trend shift, and it's all kind of like stacked under your trend line break. These leads to some of the most powerful breakouts, or the more confident trend direction. Like you see it again here, kind of like we got the inverse arc almost directly under the trend line, right? The trend line's not really far away from it. It's trying to break late. It's like right under this. So you end up getting a uh inverse arc confirmation and your level 3 confirmation on the same candle. You see that? These type of level 3 breakouts are your strongest continuation patterns that you want to look for, right? When you have that trend line here, but you also have the level 3 breaking down on it. But what I want to show you is how do you get into a level 3 from a higher time frame and not have a lot of drawdown is use that box technique even on your level 3 candle. So now if I draw my box on this level 3, and so okay, I say, all right, I have a bearish breakdown. I like to trade because I have some room to come down to this order block, right? So you're trying to get down to this order block. Of course, you want to put your full trade plan into Black Wolf so you can see the higher time frame and have eyes on everything before you execute. But say if we're just going down to the 30-minute to look for an execution on this, we have this box. We want that we under the 200, right? We're under the 200. We know it's bearish, right? It just came off of a massive level 3 breakdown with an inverse arc look like. I mean, a bearish arc out of the 200, rejected the 200. This was a great entry. Like an entry like this is where you kind of, you know, don't hesitate. You know, you inside of a swing order block, you're rejecting. You know, you got a level 3 and you got the inverse lock counter all the way back here, but you're inside of the 200 and uh swing order block and the internal order block. So your bearish arcs and your inverse arcs are the most powerful when you're getting them at resistance, like the 200 or order blocks. So what does that mean? That means that just getting a random, just getting a random one, not close to one, is decent, but getting one inside of an order block is way more powerful because of the location. You know what I'm saying? This location is everything. You had a 200 rejection and at an order block. So if you just sit back and say, man, I'm only gonna trade inverse arcs in the system. I'm not gonna trade anything else other than inverse arcs and bearish arcs inside of swing order blocks and bullish order blocks and bearish order blocks. I'm gonna ignore every other thing in the wolf chart system unless it's rejecting at the 200 or order block with an inverse or bearish arc. I'm not going to trade. I'm only going to look for trades like that. If you only did that, you would probably, you would make a lot of money. You know what I'm saying? Because you would just be getting A+ trade setups if you got room under you, because these are some of the most powerful type of location type of arcs, right? So you get arcs inside of continuation, and then some of them you get when you're at these locations where you've been patient and you've waited for these bearish type arcs where you pushing down and you're getting the trades, right? But anyway, so we got a level 3 on the 2 hour. All I did is drew a box around it. What I'm waiting for is a trend alignment. When can I break under this zone to get down to here? This 295, 297 range. And so if it breaks above this with an inverse arc, you got this fair value gap right here that you can play to. If you break under it, we're trying to play it down to here. So you'll just be waiting on that break. You know what I'm saying? So we came down, we got an inverse arc, it popped up. Now we got a bearish arc, right? It's aligned now with the 2 hour chart, and we're under the range, and we can get to our target quicker. Right. You see, they can't look in that. Now, maybe I need to put some wiggle room inside some of these order blocks, but these are more accurate than you get in the zone and drawing it yourself. So when coach say this is the target, it's a target for a reason. So always remember that when I give you a target, like I say, okay, it can come down to this level right here. And then you wait till you just be sitting there, looking at it and waiting for it to just barely get to that level, and then you lose $200 because it popped off of it. A level, so for example, you gotta have this mindset. If I tell you, hey man, jump in the car and drive, it's a brick wall right here. It's made out of, and in front of the brick wall is titanium and like an iron swords sticking out of it, right? As you're approaching that obstacle, like you just gonna keep your pedal foot to the metal and just stay in and trying to see what happens, or you gonna exit before you hit, the brick wall. You look at these order blocks as brick walls, like when you're following that trade down, and you hear me saying I'm an electric sliding my stop loss up, it's because I know that if we get to this destination, there's a high probability that it's gonna reverse on me. So I'm sliding my stop loss every time you get closer and closer and closer. That way, if it do that, stopped out. Or you can just sell before you get there, or stuff like that. But you don't have to wait. You don't have to wait until you get. If I say, okay, man, the target is 295.51, you be like, all right, 296.64. That ain't 51 yet. 295, 295 is 70, 68. And you just trying to wait for the very last little drop. If you're gonna do that, you have to be sliding your stop loss down, because the targets that I'm giving out, they are reaction zones. So when it comes down, it's going to react at that spot. If I say, hey, we can sweep liquidity, if you inputs, once price gets under 292.80, you in sell side liquidity sweep uh threat for puts. If you in puts and then break under there, you're like, oh man, coach said it was gonna stop right there, and then next the price is all the way back up here, and you down, you done lost 15-20%. It's because we can see on the chart where price is gonna react at. So it's not like fortune telling or anything like that. You can just literally see where the price is gonna react. Like if we replay this back to when it was dropping, right? All right. How long has that zone been on the chart? Let's go all the way back and look. So it ain't catching us off guard because we can actually see where it's going to bounce at ahead of time. So if you can see where it's going to bounce at, just like that car driving toward a brick wall, this zone has been on our chart since September, right? So since September of 2025, that zone has been there. All right. We expect price to come down to this zone and do what? It's never tested it, right? So because it's never tested it, that is money making information for you, even if you're inputs. Like if you're inputs and you're coming down to a liquidity pool, this swing order block, right? And you know that price has not revisited this place since September, and you see what happened when they bought in right here in September. It went up all the way up. What is this? Man, almost $100 from this spot in that sweep down here, 286 all the way up to 274, and they never came back. And they never allowed price to come back up, because after that buy, they went all the way up to 400 and some bucks, right? So now, if it's dropping back down toward this thing where they bought in at, and they haven't been back there since September, when you get here, two things should pop in your mind. I'm gonna ride puts down to here, but I'm out. I'm not interested. Once we clear 297, I'm extremely cautious, right? I'm out of there. Like my stop loss is like super tight. Like if anything happens, I'm kicked out the trade. I don't care, because I got in up here at 315 or whatever, right? But my stop loss is extremely tight, chasing that profit down. Once we hit this right here, the first reaction, you're gonna get that pop up. But this always happens in two trades. If the WTMA if the WTMA is sitting up very high, and say the candles get down here really quickly and the WTMA is lagging, the first thing that's going to happen is price is going to bounce. It'll hit the WTMA as resistance until it gets on the other side and starts that same process over, where it gives you an inverse arc. And then if the 12 has a gap between the WTMA and the 12, price is going to push up and it's going to fight at the 12, and it's going to be stuck at the 12. But then when price gets over the 12, guys, they're gonna try to push AVGO back to wherever the 200 is. It's gonna always happen in these type of phases. You're gonna get back over the WTMA. That's phase one. Then you're gonna try to get back over the 12. That's we know we're in the trend phase, phase two. Then we're gonna try to get, and the 12 is gonna try its best to get back over the 200, and it's gonna all start. It's gonna be the same exact system every time when price is chasing down, and you're going to keep. So all you want, you see how we want this inverse arc, the 12. So now the 12 is going to try to come and eventually get back up to that 200, and it's just the same story over and over again. Price is going to automatically try to get back, and you're going to see it crossover, and it's trying to get back to these destinations. So you're going to get your inverse arc, stay in here. You're going to fight at the 12. You see how we remounted the 12. It flipped to blue. We pushed up. If you ever see a candle, and this is, I think I told you all this on the call, this doesn't matter ever. All right. So whenever you see the 12 this far away from the 200, right? Whenever you see that, um, whenever you see that the candle makes it to the 200 first and the 12 is far away from it, it's always going to reject. So it's just when you get to that 200, that's just a target. You have to take profit, right? So you got back over the 12. The trend doesn't truly shift until the 12 gets back over the 200. If you just start thinking about that location wise, it'll never trick you. Like right here, you see how it's almost making a triangle is so far away from the 200 and the 12 are so far away from each other. The 12 is going to try its best to get back over the 200 every time. So when you see an inverse arc and price get back over the 12, these are really good trades because it's going to try to bring price up to try to test the 200 with a big long range, right? Now, if you this close to the 200, it's not as good of a trade because you don't have that much room because your dynamic resistance is right on top of you, right? So if you get back over here, look at this inverse arc rejection, inverse arc, you moved up a little bit, rejection, inverse arc, rejection. Look at this, almost making a triangle with that distance between the 12 and the 200. That's going to be a decent trade because um the distance away, you're going price has a little bit of room to move to make it to the 200. Price has a little bit of room to move to test the 200. But like I said here, you can't get faked out by this big beautiful green gap up or candle when your 12 is under it. The trend hasn't shifted yet. This is just a retest. And so when it pushes up, it's just gonna come up here. It's a liquidity sweep. It almost 99.9% of the time is gonna be a liquidity sweep or a rejection because your 12 is not in position or sloped up to mount this 200 cloud, right? And so here, when you see it finally mount the 12, this is when you can start being hopeful because look how aggressive that slope is for continuation on a stock. Now it still needs to break and close above this order block, but we also can see in this example, even though we're in replay mode, we can see where the A plus trade is as well, right? So we can see right here that we've tested. This ain't the first test of this order block. We come up, we swept liquidity on here once, right? What does that mean? They wanted to sell. They wanted to sell AMD off, right? What did they have to create? They had to create a greater fool. They had to push price above this order block. Everybody thought what is this? AVGO was about to skyrocket back up to 400, but they pushed it up above this swing order block just to grab some buy side liquidity. The candle never closed. So because I was trained by a hedge fund person, I'm only trained on watching true confirmation. I need a candle to close above these levels. And over like dynamic support and resistance, I need open and closed candles with the full body and wick over certain things for me to know that it's a confirmation. So if you're chasing wicks and like momentum and the candle doesn't close, it's not confirmed. So look what happens when you don't wait for stuff to confirm. You just get sucked back up, right? Versus look at that, not waiting for price to close above the level. You get sucked into these traps. So they just push price up and they just snatched it back down at this order block. Now, I don't know if AVGO has made it back above that price yet, but we can just see, and you'll see that the only thing that can defeat that and confirm that price is ready to go higher is if the candle closes above that level. All right. So now we got a candle close above that order block. That's why nothing on this chart, like an order block, will disappear off the chart. I don't care if the price, I mean, it'll disappear, but it's not going to stay gone unless a candle literally closes above that level to tell you, okay, all right, we've closed above that level. We got our 12 back above our 200 cloud. The colors switched over. We bright and sunny and happy. The 12 is blue, right? And so that's when we want to try to hold our ground and look for the real push up to the next target. So now we're at target, but we're not waiting. We're not being foolish and getting faked out because if you stick to the confirmations and be patient and just let the system, get rid of the obstacles. And when you see an obstacle, just respect it. Like if you see a red zone sitting right above you, like this move right here, somebody got excited. They said, "Oh my God, we closed above this level." man, I want to see. I'm curious, how far can they go inside of this red stuff? It's like saying, how much further can I drive the hood of my car into this brick wall? Right? You know that this is a resistance level. These are sell orders. When you get this beautiful move right here, even before you get here, there's no need to be greedy. Take some money, remove your stop loss, and then we're going to be smart and let somebody else fight this battle. We don't care. We don't care about participating with our money to help them clear the order block, right? We let them clear that order block. That's somebody else's job because we can see the order block. You see how the damage control. Look at this. We pushed up. The wolf chart said, "Hey guys, ever since January, this is where sale orders are sitting up at. So since you can see it, hey, I'm fine with 348. I don't really have to be at 350, you know what I'm saying, 352. You can hold it, but set just if you want to participate in that, understand how to slide your stop loss and let yourself get stopped out. Because once we got here, what happened? Look where we came back down to the penny, touched the top of it, pushed up. So if you was in puts, you don't want to say, "Hey, this thing's selling off, man. It's super bearish. I'm finna see how deep we can go down, see if we can get to the 200." Just respect the levels because you see how we're touching them and hitting them and stuff like that. So the next trade would be what if we close the candle above the high of this candle. So every order block is going to have a candle that is the exact high and low of that order block, right? But the way that you know when something's going to go up after closing the over order block is that because this order block is on a 30-minute time frame, if this same exact order block with the high of what's the high? 344.07. If this order block isn't on the 1 hour chart, and let's look and see, that means that range is clear for us to try to get up, a little bit higher. So let's see if it pops up. So we know we have a supply up here. So we have an order block. What was the high of that order block? I forgot it that fast. Let me see. All right, so that order block was around in this price range right here. So now we see that at 345, you have historical support, but the next destination is going to be a rejection inside of this order block. So is this a trade? Is AVGO kind of in a bad trade range? I would say it's in a bad trade range, right? Like it has a decent, what I'm saying, like little scalps you can get up in here. But when you zoom out and look at them, right, it's clear as day, saying what needs to happen and where you need to kind of like put your money up, saying, like right now what I'm looking at is from this replay mode, I'm very interested in them losing the 200 because they can come down to 320 to 310. They can come down pretty low if they lose the 200, but in order for them to really really kind of have that big move, they need to close, it looks like, above 360. And so we'll look and see how high this setup is on their chart. But this is the type of stuff you need to look at when you're looking for these A plus trades. Look at that. It's a lot of sell pressure on them. It's not really a lot of support, what I'm saying, on them down below. But we got A plus, man. Once they get over 360 something, that's when they can just push up and have one of them big giant moves. It's on a 4 hour chart. Let's look at the daily. Same one on a daily. And let's look at the 3 day right quick. So we can see that so on a so really with that daily chart, that 361 level on AMD. So if I was calling this out, I'm telling you 361 is where you want to kind of be getting into them for like your longs, right? Because you can see that the trigger time frame is going to be this daily time frame. Getting above 360.66, closing a daily candle above this level, even though you got this order block right here, and it's going to try to come and mitigate this order block and try to come all the way up to 388 and get rid of it because you also left a gap on the chart to 394, right? And before this order block. So them pushing up and clearing that level is where you want to try to get into your A plus trade. But you see we got some support down here for a liquidity sweep in this range, right? And so we'll try to play them out, and they push down. It came down to the bottom of their let me see, they swept and kept it. Like they keep holding it, they lost it. So all they did so far is come down. They swept liquidity once. They swept their 200 SMA, and they're coming up to their target. I don't know how far back I went. I just want to see what the price is. So this current. So they're stuck in this range now. So to play AMD, you got to understand their range. 360 to 283 is their current range right now. Go ahead, Erica.
Okay, so when you said when you get a daily close above that supply zone,
Mm-hmm.
that's when you would drop to a lower time frame to find an entry on that daily candle. Am I understanding that right? Because this is where I get very confused most of the time. As you were saying that, I was going, okay, but if a daily candle, if I am waiting for a daily candle to close above that, the arc or the inverse arc is way down there. So shouldn't have way down there been the entry. Obviously not because of where price went, but that's where I get stuck because I'm like, well, if I'm waiting that long to enter, I don't understand how to enter at that point.
Yeah, so it's two. So getting an inverse arc to play up to a target. So you see how you have this target right here, right? And you have your 200 under you. Getting an inverse arc, that just means that when you get an inverse arc, you have to exit at this order block, right? Because these are just small, but you can see that you're in a range now. So when you get an inverse arc, your inverse arc is going to take you to your nearest target, right? Your order block when
Oh,
your order block is in the way. This is stopping you. This is the brick wall. So anytime you get an inverse arc right now, you know, like even though I got this lock candle right here, right? I got a lock candle, but I'm still gonna have to exit at the order block because it's gonna reject me. Now, what I'm saying is once you close above this level, even if the price pulls back, what you're going to see is that it's going to be nothing but sky, like clear space right here. So that means the next time you get a bullish breakout, it doesn't have this obstacle in the way anymore. It's going to try to go all the way up to here.
mm-hmm.
You get what I'm saying?
Because, yeah, I think so. Because then would you get a fresh inverse arc
Yep.
once that order block is cleared and price pulls back?
Mm,
We know that that level has been taken out, that supply zone.
that's
So
correct.
then we wait for the pullback and then enter on the next inverse arc.
That's right. So
It,
you
oh,
so yeah, so if you close over this level right here, right? Say you close over this order block, what you will see in the Discord, this is nothing more than what's happening here. And when you go to supply zone conquered, have you ever
yeah,
been to this channel?
yeah,
So
oh yeah.
yeah, so all these stocks are just stocks just doing that, right? So it's just once you see a stock have okay, a order block has been conquered, that just means that price has got pushed up and it has closed above one of those red zones and now
Mhm.
it's ready to go and take the next leg up, right? That's why the alert says it's a bullish alert. Uh, chart it out and prepare for the next leg up when that happens, right?
Yeah.
Now right here with the demand zone loss, it's the opposite, right? So when you lose a daily demand zone, like some of these have, like Meta, right? Meta lost a daily demand zone on the 13th. What was the 13th? Was it 13th Friday?
Friday, yeah.
Friday the 13th. I didn't even watch anything scary. So let me see. Meta closed under a daily green zone. So if I come here and go to Meta's chart, and so you see how it has that red candle right there, and it's already made it
Mhm.
back down to another one. But oh, I'm in replay mode. So let's see. Exit. Did I exit out? I think I did. What's this? Oh yeah. So this is the 13th. So this is why they hit Meta, even though it came in after a bearish arc, but I think it gapped down though. Yeah. So it was just these. I guess it was, yeah. You see how Meta prices here,
Hmm.
where the WTMA is flat and it's kind of smushing it between the 12 and the WTMA, right? So it just flat
Hmm.
out it turned into straight out resistance right there. And then you see here, we had that candle come in, and then this candle closed, and it got rid of that supply zone and that order block. So now Meta's in position now to where it's going to do one or two things, right? The best trade on Meta would be to wait for it to sweep this liquidity or come down here and sweep down here. I don't know if they're gonna come out to 581, but if they come down here and they sweep liquidity on this order block, right? that would be extremely bullish if they not bullish. I mean, they're in the bear trend. What I'm saying, like for like a long term entry, if they
Mhm.
come down here and they push under it and then go back up, that would be bullish. Melissa, you can go ahead.
Okay, so this is how new I am. So I have been on the options part of the Discord. And when you open that up, I was in there going like, okay, I want to see what it is. And it says on my screen, you don't have permission to view this history.
Oh, okay. Yeah, that's simple though. What's your just send me a message in the main chat. Just say just add me in the main chat and I'll give you permission.
All right, no problem. Thank you.
Yeah, yeah. But so guys, that technique though that I'm showing you guys with drawing a box over your lock candle, it's going to save you a lot of pain and suffering with your entries, and it's going to like when you start looking for, like we can go to any of these candles that's locked, right? Especially I like to see ones that hadn't gapped up, right? But even if you get on a daily time frame, a lock candle, and then draw the zone on it, saying that is it'll still and you drop down to your 2 hour time frame for the precision entry, that'll still help you, to get, into the trade with confirmation, or you get a lock candle and you immediately go build your trade plan. Now, when you're in the Discord, there's two spots that you need to get used to looking, right? And it's when you go into like my trade plans, right? So I called out Zum. That one ended up going up like 255%. I'm calling out the data in here, but also like just which ones to build a trade plan for, and things like that. Which stocks to build trade plans for. Um, and so you want to get in there and build your trade plans. Like the circle play we had got in the circle. I think I was only up like 77% on that one. But the trade plans, like when I'm calling them out, you can just go ahead and build your trade plan. Like I think this was before RTX had broke out. I'm not sure what Meta and AVGO did on the ninth. We can go back and look at those on the ninth. So they were breaking out. So you look at them on the ninth, they still were able to push up before this big drop. When I put the trade plan out there on the ninth, they still had a move from like, so say if you got it at the end of the day on the ninth, it still was able to gap up on the 10th to, that was like what, almost $15, right? From that call out. And so I'll be putting the ones in there for you to build your trade plans for. And so you can make sure you pay attention to this tab. If you don't have access to that tab, just let me know. You know what I'm saying? Sometimes I'll post the positions that I'm in, even, some of these that were down, so they end up going up a little bit. Some of them I end up getting stopped out. I think this IWM one was one that I ended up getting. I think they reversed and went up on me. But then like Netflix and RTX and Spy and all those did decent. Microsoft did good when I had posted those in there. And so but I sometimes I post all the positions that I'm in, but I always tell you what to build a trade plan for. That's kind of, and so if I say build a trade plan for this stock, it's because I've already looked at, saying like that they have an A+ trade zone, that they're I already looked at the fact that they have an A+ trade zone. And so all you have to do is just build the trade plan. And the reason why I do it like that instead of saying, hey, get this contract, get this expiration date is because I don't know which contracts everybody can get. You know what I'm saying? So everybody portfolio size is different. So I don't want to be like get a $800 contract, you know what I'm saying, or get a, whatever, you know what I'm saying. I want to put a contract out there that it makes sense for a person, or think they can't get in a trade because, a certain whatever. But if you do a trade plan for it and let Black Wolf know, say, hey, this is the contracts I can afford. Can I even play it? Can I play this with this contract, or can I, whatever? Then you'll get stuff that's more so catered to what you want, what you can get with your portfolio, even if it's like more expensive ones, or if it's some that are, you know, cheaper ones. You know what I'm saying? You have that flexibility to be able to do that and plan it out.
So how, so when did you get the most confident at choosing what kind of trade you want to get into, like Netflix or Amazon or getting into tougher trades? Was it when you got more confident in it?
Well, see, so what builds your confidence is having a trade plan, but even more than that is understanding when you're in an A plus trade setup. And
Mm-hmm.
so your eyes have to be able to get used to seeing this, right? You see how we had this historical support line, and then we had this other one way down here.
Mm-hmm.
Now, this is an old trade, but I'm saying in like some trades you will come across and they'll be in this same exact setup where they have a candle right here and there's nothing. You look across the daily and the 4 hour, and you have this wide open range where the stock can just move. Just like I just showed you guys on AMD, I mean on AVGO, right?
Mm-hmm.
We're going to look back at this trade. I don't know when, but eventually it's going to come and close above this level. And then you see how it's just wide open. Like this is a $40 move on this stock. You see how it's just wide open. It's going to be a day you're going to come back and look at AMD's chart, and the stock price is going to be way up here. But this trade has always been here on this chart. Like with this wide open space right here, it's always been here. You just have to wait until the candle closes above and gets rid of this last little obstacle that's in the way. When that happens, this trade range is just going to be wide open, and you're gonna see price push and make this crazy move up all of a sudden, and everybody's gonna be talking about it. You're gonna see people talking about it. Transpider gonna be dropping stuff about it, but this is what you wait on. So your whole goal is to find as many trades that have this capability as possible, right?
Mm-hmm.
Now, one thing I do is I use a screener to look for these trades. Do you all use screeners?
I haven't.
Okay.
I've been trying the ones that you gave us. Yeah, and then Pretty Hustle, she put out a few last year,
Mhm.
I think. So I've been trying those.
All
I'm
right.
pretty new at this. I'm probably within the first 2 or 3 months of doing this.
So do you use Black Wolf?
Yes, my husband's letting me use his ChatGPT, Black Wolf. I have not yet used the trade plans part because I'm still brand new at being in Black Wolf. So
Mhm.
I'm just starting to get to know everything. Like I didn't even know I had access. I didn't know I didn't have any access to some of the
Mhm.
stuff y'all are having access to. So,
So so Black Wolf is what's going to help you to not feel. I'll say it'll take some of the if you try to remember to look at all these time frames by yourself and you like everything I just said, if you're doing all that manually, it's gonna overwhelm you. I don't care if you've been trading
mhm.
for two
Oh,
years.
I was there. I was
Yeah,
seriously there.
yeah. So I'm gonna explain these things to you guys, but two things that make things not feel so murky is in the Black Wolf training, it helps you get a certification called the Certified Wolf Chart Analyst. Okay. When you get that certification, it kind of clears up kind of like some of the terminology. And outside of that, uh, all you're doing with Black Wolf while you're trying to learn what a lot of this stuff means on like a what is this yellow zone on my chart? This is your 200. This is your 12. While you're trying to learn that basic stuff,
Hmm.
uh, all you're doing is taking screenshots. Like all you're doing is going to like your 1 week chart and you're taking a screenshot of this 1 week chart. So you would take a screenshot. You see how I just saved this AVGO plan right here,
Hmm.
and then you're going to your daily chart and you're doing the same thing. You just making the chart visible, right? And then you're taking another screenshot, and then you go into the 4 hour and you're taking another screenshot, right? So you're just taking these screenshots on trades for trades. Now, and I'm just gonna stop at my 1 hour just for this example.
Now, do you do it on different time frames?
Yeah, that's what I'm doing now. So I just did the 1 week, I just did the 1 day, the 4 hour, and I'm gonna do the 1 hour
Oh,
now.
okay.
All right. And again, that same trade, look at that. That's a beautiful range. But now I'm gonna take another screenshot. And so now when you're going to to uh to ChatGPT and you go to Black Wolf. Wait for it to come up. But when you go in here, you're just asking him to give you a trade plan for that stock, right?
Mm-hmm.
That's Wolf Eagle. Let me see. Mm-mm-mm. So you can say you can go in here and you can say I use a trigger called TEE. That means think, evaluate, and execute. So you just say build me a TEE full option trade plan for AVGO, right? And then those screenshots that I just took, I'm going to upload them to him. And then you send them to him and allow him to analyze. So everything that I just taught y'all to do, I've taught this AI how to do as well for you. But it just cuts that down on your learning curve, right? While you're trying to work on stuff. Now we just saw that supply zone that was at 400 on AVGO. You all remember that?
Mm-hmm.
Looking at this range right here, and then on the daily chart, I think it was on what were we looking at on daily?
That kind of stops us from overthinking too.
Yeah, you see how right here, you see how it says we got. You see how this red zone is at $400.
Mm-hmm.
If you look over to the right, it has this red zone at 400, and then you see how it has it letting you know. Okay, I see that $400 supply. They're telling you that it's in the distribution phase, but I'm gonna just show you some other things, right? So look, we saw that $292 range that we were looking at down here, right? You see this $292, $295 range. So it's letting you know, okay, I see the primary demand zones and the secondary demand zones or these order blocks. It's telling you it see all these different things, right? It's mapping out whatever the trade is, right? And so it has a bearish continuation until demand reaction. Same thing. I think it want to drop down and come sweep liquidity at the demand zone. So it's saying, okay, my bias is bearish continuation, right? And it's giving it a grade A minus. So it's still waiting, right? And but look at this. You see how AVGO's price is currently at 322. If we go to the chart, the current price is at 322. You see that? Now,
Mm-hmm.
you may say, man, I want to get into puts. I'm finna jump into puts right here because look at the demand right here. Because Black Wolf is trained on liquidity and it understands that the best place to get into puts is right here. Because if you get a bearish arc here, you got all this room under you to drop back down. Look where it's telling you your primary entry is $10 or so above where the current price is. And the second entry is at uh 352, which is that actual order block, right? And so it's invalidated. What level I have? I just did this. I just did a top down, just manually with you guys. I said, man, if this thing gets over 360 to 361, it's finna go. It's finna make a $40 move. And that's look where he saw this trade is invalidated for puts if price starts closing a daily candle over 360. You see that? But if you jump into puts at these two targets, saying and it rejects, then saying your targets are 218, I mean 318, 308, 295. So it sees
This is
all that.
gonna stop. I'm telling you, this is gonna stop making me overthink things.
Yeah, yeah. And so
Because
it
that's
does.
what's been happening with me. Like I will sit there and overthink it and I'll get out before it even actually goes for the complete downward move. And
Right.
then I'll be
And so
chasing.
and now so for advanced traders, you see how the bearish bias is telling you I'm not touching puts unless price gets to at least 332, 336 or 345, 352. I'm stopping out at 360. When I see this, I also see the fact that okay, if I'm a day trade and we get a bullish breakout, my target is going to be 332 to 336 for calls. If it breaks out tomorrow, for example, to make a lower high, I know that I'm playing it and I'm exiting at this zone. And then if it breaks above 336 for continuation, I will play upside into 345 to 352. But once I get here, I'm looking for puts. Ultimately, I'm looking for puts. But it's already telling you that it can still, from the current price, it can move 10 to 30 bucks from the current price, right? And so if you look at this chart and we go down to the 2 hour chart, we can see that it's pulling back, it's at a historical resistance. It can easily bounce from here, but it can also play into this range. You see, it can bounce from this current range and end back up at the 335 range. You see how Black Wolf is looking at, okay, we can come to this fair value gap, reject at this 332 to 336 range, and come all the way back down to the first target at this 318 range, right? So it could come here and inverse arc, but if I play calls in this range, I'm exiting at my target, right? And so it's seeing all this stuff for you. And the cool thing about it being built on ChatGPT is that you can copy this response right here and you can say, I'm new to trading. Break this down very simple and short, right? And then since I copied it, I'm just gonna paste the exact trade plan. And then I'm gonna just enter again. And instead of it giving me, this terminology, it's gonna give me the simple version of that identical trade plan. And so it's just gonna break it down like, hey, this is the important levels. This is where you enter in at for puts, or you enter in here and blah blah blah, blah, you know what I'm saying? And then if you still confused, you can say, okay, so what exactly am I looking for? So if say price get to this zone, so you can say like, well, if so, what exactly needs to happen at the first entry for me to know to get in? And then you're looking for big red candles, long top wicks, price rejection from the zone. Um, So it's breaking it down, and you can. I mean, I promise you can keep going as far you can. And then when price gets to the zone, if you got this trade plan up, you can say, "Hey, I'm about to talk to you about the AVGO trade plan. Refresh yourself on our AVGO trade plan. Let them come back and say, okay, I got the details of our AVGO trade plan. You say, hey, look, prices at the zone. I want to send you some lower time frame screenshots of what I'm seeing. You let me know if you think, how should I attack this and enter from the 1 hour chart or blah blah blah. You just send them the lower time frame and you can just enter it. You can work with it the whole time you're trading, and you can break it down as simple as you would like. You know what I'm saying, to avoid having a bad entry. But you can get in, but you already have your take profit targets. It's gonna read those charts for you. You know what I'm saying, and it's gonna answer your questions. But all you gotta do is just, if you curious about it, it's gonna make your learning process like really really quick. Yeah. So, does anybody else have any other questions? We're finna get ready to wrap up. I hope this added value to you all trying to get your entries down pat, and how to use that so that the supply and demand zone indicator, it's gonna come into play. You all will see it tomorrow. Sometimes when you're on your lower time frame, you will see a zone like this, and it also shows up a little bit quicker than your regular order blocks. But you'll be looking for, sometimes you'll see a zone like this pop up on a lower time frame, like the 3 minute or 5 minute and stuff like that. And it may be completely separate from your your order block. Sometimes it's going to line at the top of your order block, but sometimes you're going to see it slightly above an order block like this right here. This will help you, because when price starts pushing up, if it breaks over your order block, you will know that, okay, it needs to break above this supply zone too, because it may break above that order block on the first attempt and then wick into this supply zone. So you want to see it clear and close above this order block. So it just needs to close, even if it's by 1 penny above this level, and that's going to let you know that, okay, this downtrend is in jeopardy of switching over to an uptrend to come test this 200 cloud. So you will see it close above this level. You might see a change of character pop up, but these are going to come in handy when you're looking for these trigger time frames on, okay, if I see that this supply zone is on the 30-minute at this candle, and you don't see it at the 1 hour chart or whatever chart you don't see it at, that's gonna be your trigger time frame. So like right here, we see that yeah, this one right here has already showed up. So that just lets me know that when SPY, so we got all our order blocks on here. So this is a perfect example. Tomorrow, let me see, is this a live candle? Yeah, so tomorrow, when you see on a 30-minute chart, what you'll be looking for, the 30-minute time frame is the trigger time frame for SPY to break out if it's gonna go up. You have your liquidity zones down here. So you'll be looking for a liquidity sweep. If it pushes under 650 and then comes back up into this range and start closing candles, or you get the WTMA, the inverse arc, that's when it's not finna just lose this level unless something very bad comes out. But to the upside, you'll be looking for a 30-minute candle to close above 672.34. If that when that happens, it doesn't have to happen tomorrow, but whenever that happens, that's when SPY is gonna try to push up aggressively to like 677 and eventually try to come back up here to 682. So the 30-minute chart right now is the trigger time frame because this is the last time frame that this order block showed up and the supply zone. So this is our upside trigger time frame. If it doesn't close above this, it ain't trying to go up. So, and then you got this sitting down here for your cushion. But I'm going to send this video out to you guys. I hope this added value to your understanding of like how to trade those lock candles and stuff. And if you have any questions, you can always reach out to me in the Discord.
Thank you, Shon.
No problem.
This has been phenomenal, Shon. Thank you so much.
No
Yes,
problem.
thank you.
Thank you.
That helps me so much.
All right, so I'm going to email this out to you guys. It usually take about maybe like an hour for this Zoom thing to download or whatever. Probably quicker than that, but I'm going to send this to you guys. So be looking out for that um, inside of the Discord, not the Discord, inside your email address. If you want it in the Discord, through the Discord, just send me send video. Just send the message, and all you got to say in the message just say send video. If you prefer to get the Zoom link on Discord, but other than that, I'll also email it to you. Okay.
Okay.
Okay, great.
Thank you so much.
Thank you.
No
Thank you
problem.
again.
Good night.
Good night.
Good night.